All right, hello everyone. We're going to go on ahead and review the Robinhood portfolio today. The portfolio did very well. It is up 0.36%, $117, and in after hours, I'm up $15. For the past week, I am up 35%, or excuse me, I'm actually up 1%. For the past month, I am up 3%. For the past 3 months, I am up 12%. Let's take a look at the year chart, guys. I am up 22%. So it was a very, very good 2019. The stock market did very well, despite a lot of negative feedback as far as the market goes. A lot of people thought that the market would fall into a recession in 2019. That did not happen. In fact, the market, I think the S&P 500 was up 26%. But yeah, the whole entire stock market right now is very pricey. All-time chart shows 22%. So we're going to quickly review some stocks. I have been making quite a few changes in the portfolio, and my goal, like I said, and I probably mentioned this in the last video, is that I really want to get the portfolio to yield a dividend yield of 5%. So I want the entire portfolio to yield 5% dividends. But the problem is that when I buy some of these companies, you have to buy companies with extremely large yields. For me, I look at dividend yields between 3 and 5%, but any more than that is probably a little bit risky. 6% is fine. I've seen some stocks even go up to 7 and 8%. A lot of commodities, a lot of oil stocks, a lot of real estate. But my goal again is to get the portfolio somewhere between 5 and 6% worth of dividends, and I've been making a lot of changes in the portfolio. So there are a lot of companies that I really like, but unfortunately, because of their valuation and how low their dividends percentages are, I have to make some adjustments. So let's quickly take a look at the portfolio. Apple is at $310, doing very well right now. It's up 4% in the past week. In the past month, it is up 15%. So Apple is absolutely crushing it here. In the past 3 months, it is absolutely on fire. It is on up 33%. So let's take a look at my position. I'm still having an average cost of $179, and my total return is now 72%. So that is absolutely ridiculous. I am killing it with this stock. I am up $1,305, and today was a very good day within itself. It is up 2% for $71. So Apple has absolutely been crushing it here. And if you look at the past 5 years, it is up 186%. This is a blue chip technology stock that is just absolutely on fire right now. It is just rolling over all these other tech stocks out there. Amazon, it's just insane right now. Let's go on ahead and review some more stocks in the portfolio. Johnson & Johnson at 145. I have an average cost now of 136. So in the previous video, I believe my average cost was $129. I have increased my shares of Johnson & Johnson, and now my total return is up only 6% worth of Johnson & Johnson. Unfortunately, due to my portfolio changes, I tried to move a little bit of money out of Johnson & Johnson while it was sitting at all-time highs. But, this is a company that, again, that really works well with my portfolio. I think that I need companies like a Johnson & Johnson that have been continuously paying their dividend reliably. And even though, like I said in the beginning of the video, how Johnson & Johnson doesn't really have one of those high dividend yields that I'm looking for, I'm looking for dividend yields around 4%, 5%, and Johnson & Johnson only pays a dividend yield of around 2%, maybe about 2.5%. But, Johnson & Johnson is a staple core holding in my portfolio. So I bought right back into Johnson & Johnson, and that increased my average cost. I am not worried about my average cost right now. At first, I was a little bit in the previous videos because just due to evaluation alone, I consider Johnson & Johnson a little bit expensive here. But, like I said, it's better to ride the wave of the stock market than to fight against it. And, who knows, in 6 months to 8 months from now, at a price of $145 may look like a steal for Johnson & Johnson. So as long as you continue to have that long-term mindset, it really doesn't matter what price you buy into Johnson & Johnson if you're willing to hold it out and, hold for years on. But I've increased in my shares, and, obviously, I want to get this all the way to up to a 50 to 100 shares worth of Johnson & Johnson. It is a blue chip dividend king. So AbbVie is sitting at $90. My average cost is $65. This is another one of those stocks that I'm really crushing it here with a 37% gain and $1,229 worth of capital appreciation. So AbbVie has really a really still good dividend yield on them. I don't know if that dividend yield is accurate or not due to the share price increasing, but this was a very good call for AbbVie, and I really do like this stock because, like I said, I think that it has one of the more popular drugs on the market, Humira, and they're starting to diversify their portfolio a little bit. I know they have bought into Allergan. There's another company that they wanted to just, expand their, their portfolio as far as, owning Humira and not being so dependent on it. But this is apparently a dividend aristocrat. It's a spinoff of Abbott Laboratories, and this is a very good stock still. If you can get it around $90, I still think that the valuation alone is a little bit intriguing just because of the high dividend yield. So, yeah, I like AbbVie a lot. So Altria is at $50. My total return is $514. So this is a stock that I'm doing very well with, and they pay a very, very good dividend yield on them. Dominion Energy, $81.92. My average cost is $81.86. So, this is another one of those companies that that I'm looking for in to put in my portfolio. I'm looking for a stock that pays 4% dividend yield, a 4% dividend yield, and I like the utility space because it's very defensive. It's very defensive, and the price is very affordable. In the last video, I had stocks like Home Depot. I had stocks like I may have had some more stocks that were very pricey, but it's very hard to add to those companies because of their valuation alone. And when you're trying to compound dividend yield, you have to buy a lot of stocks. So you have to buy a lot of stocks at that company. And Dominion Energy, I like this the sector space over commodities. The thing is that I think I had in the last video, I had Exxon Mobil. I may have had Shell or Exxon Mobil. It was one of them, or maybe Enbridge. It was one of those stocks. But oil stocks and commodities tend to go up and down frequently. I'm looking for a little bit more stability, and that's the reason why I purchased Dominion Energy. So AT&T, $38, 100 shares, $212 on them. Blue chip dividend stock, I like them. Microsoft, $162. My average cost is $159. I'm up $31. This stock is overvalued, but the reason why I bought Microsoft is because I want to diversify my portfolio a little bit as far as technology goes. I think that Apple's crushing it for me. Let's not lie, guys. Apple is absolutely ridiculous right now. It has the highest percentage gain in my portfolio, I believe. I think actually that's AbbVie, but actually no. Apple is up 72%. So in terms of capital appreciation, I believe AbbVie may be beating Apple, but Microsoft plays very well with Apple. And I was looking for another technology stock to put in the portfolio because I'm not exposed to that sector a lot. I only had Apple in this portfolio. So Microsoft, I thought about Texas Instruments, but I don't really think that I'm going to buy Texas Instruments. If I'm going to buy Texas Instruments, I might as well buy Microsoft. And, I was looking at IBM because IBM has a very good dividend yield on them. I'm looking for companies that have, 4 to 5 dividend yields and just a little bit more stability. Exxon Mobil, they're not in this portfolio anymore, guys. They're not in this portfolio anymore because even though I like their dividend, I just don't think capturing the dividend is worth the risk of capital appreciation. It's not worth losing equity over trying to establish that dividend. So I need a company like Microsoft that's continuously growing their dividend and at the same time getting me a little bit more capital appreciation. That's why I bought them. This stock, I think most of the money that I got from Home Depot, because I had sold Home Depot, I basically traded out Home Depot for Microsoft, and I don't think anybody can hate that trade, not necessarily speaking, because Home Depot is a very good stock. I regret selling them, but to trade them out for Microsoft, I think that's a fair trade. So new residential investment at 1634. I've been doing a lot of swing trading with this stock. I've been in and out. I've been all around. I've just been absolutely trading it and trading out of it because I have unlimited day trades now that my portfolio is at $32,000. So I just get in, and once I get like $50, I just get out. But this stock, I need to really see if I can start compounding some of these shares, because it is a really good stock that pays a really unstable dividend, arguably an unstable dividend. But they continue to pay that dividend nicely. I mean, you get 50 cents for every share that you have, and this is yet another $100 if I just hold on to these shares. So perhaps on another pullback, maybe I'll buy another 200 shares, and then another 100 shares, and then I'll have like 500 shares, which would be absolutely insane. But News Residential Investment, doing a lot of swing trading with them. So, and SPHG, Power Shares S&P 500, high dividend, low volatility ETF. Let's take a look at my position. The shares is now 150, so it looks like I bought right back into SPHG. I know they had a slight dip. I'm trying to bring it up on the graph here, and I don't think they dipped at all. I think I just bought some more SPHD because I really like this ETF. This ETF will now pay me over $20 each and every single month, and it has a portfolio diversity of 20%. So that's actually quite high, but it is an ETF. So it's just a handful of basket of stocks that, are very defensive. Like, I know this ETF is really high on your utility exposure and real estate. So it's very, it's defensive, but I wouldn't go too crazy with the defensive play, because if the market were to go into recession, I still think this ETF would do very poorly. But the monthly dividends really do compound. I've just been getting monthly dividend after monthly dividend after monthly dividend. So let's take a look at those dividends. I've been buying, and you guys can see that I just keep rolling the dough all in this ETF as far as compounding the monthly dividends. So I think that will be it for the portfolio, guys. And like I said, I'm looking for companies that pay very high dividends, but I do enjoy the capital appreciation. So, companies like Exxon Mobil, I do love their dividend, and I do love oil stocks, but is it really worth, risking the capital equity to hold on to an Exxon Mobil? It has not been doing well. Let's take a look at Exxon Mobil just right quick. I don't want to make this video too long. So at $69.77, but if we take a look at the past year, it is down 3%. So it actually underperformed the S&P 500 and all the major indices. And in the past 5 years, it is down 24%. So, you have to ask yourself, is it worth buying into a company and risking that equity to capture the dividend? And, for me, I put this money, I said to myself, I know, what, I'm going to put this money into Dominion Energy, because Dominion Energy tends to be a little bit more defensive. I do love the utility sector over the oil sector, and a very good dividend yield play. On the P ratios is quite high, but I have great confidence that this is a great addition to the portfolio. So yeah, guys, just let me know what you guys think in the video. Right now, the portfolio is sitting at $32,429. The stock market is at all-time highs. You really have to be careful with some of your selections now, with the markets essentially speaking overvalued. A lot of stocks are overvalued, and it's really hard to buy companies that really fit what your portfolio is trying to do. But not to make the video too long, I'm doing very well, and I hope I continue to keep this up. You guys, I hope everyone had a great trading day, and I'll see you guys next time.